Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update. And this is for Monday, the 10th of April, 2017, just about 4:10 p.m. Central Daylight Time. All right, my friends, a very mixed nothing stock market. Another attempt in the VIX to break out to the upside didn't really carry through. While the gold market finished today at $1253.90, the last quotes were over $1256. So when the market opens tonight, it'll probably be up there, and silver should be up a little bit. What did stay under a lot of pressure was the copper and the platinum market. The dollar index did reverse down a bit at the expense of most of the currencies which were up against it today. But does it all mean anything one way or the other, because we're sort of in a holding pattern? Now, we know in the stock market, earnings season's coming. We're going to have a series of economic reports as usual that at the beginning of the month we start looking at to get a feel for what's going on. But we're still far away from another Fed decision on interest rates. Janet Yellen did speak. In fact, she's probably speaking right now as I'm talking and answering questions. I think it's the University of Michigan, so I'll write about that tonight once I read the reports on it. When we come to the NASDAQ, the one thing that I see on a weekly chart is a lot of consolidation, but certainly a market that is still very much in an uptrend and has shown no sign yet that that's ending. When I go to an area chart of closes on a daily chart, this is the daily, you can see how the market's come up. It has stepped back, but only 20 points away from the all-time high close. That's not very far at all. When we take a look at a daily bar chart just to see the action, you're pretty much caught at this 5,400 area, and you're no longer in a trend in terms of the swing line. Now, the brown line is the swing line, and you look at it for a pattern. In a bull trend, you're making higher highs and higher lows. In a downtrend, lower highs and lower lows. And in no trend, you have just what you have here. You have in some manner a high that's higher than a previous high and a low that's lower than a previous low. That's what you've got right now. Also, when that happens, it's not uncommon that this all takes place against what I call that line in the sand, the 18-day moving average of closes, which I determine is a neutral spot on the chart. It can be resistance as the market rallies up to it from here, and it can be support as it was up here and it falls back to it. So it does have several roles, but it often is the area that you get your corrections or pullbacks to, and it's acting that way right now. The other number on the chart are these black lines that I'm showing, and those are the algorithm called a Bollinger Band. And what this does is it offers theoretical support and resistance. It also gives you an idea, is it trending, like you can see here, moving up, or what's it doing now? I could argue that it's had a slight bias to the upside, but it really stopped this whole gallivanting to the upside right here at the beginning of March, and it's sort of just flattened itself out ever since then, caught between the 54.68, 53.46 level, top and bottom. The slow stochastic study, a momentum indicator, is pointing gradually down, and prices have pulled with it to the downside. When we come to the June E-mini S&P, here too we have a pattern of a higher high and a lower low. You see that? There's no trend. Where do you see this market stuck at? How many days has it just been trading against this number? 2 weeks? It's looking for direction, but it's got a slight bent to the downside. I think the market finds it easier to be short than long on, and that to me is the important thing. Should the market today, well, let me say it correct, tonight, should the market take out today's low of 23.47, you could end up with a pattern of lower highs. You got the lower and low already. That could be a problem for this market. You could be in a downtrend that carries back to 23.31. In the Dow, you got the opposite. You've had a pattern of higher lows, higher highs, but notice you are just staying under the 18-day average. Instead of giving the market by closing over that 18-day average any upside bias, it's refusing to do so. And even if you take out today's low, you will still have that pattern of higher highs and then a lower low. You've got nothing in this chart, and momentum is flat to trying to push up a little and can't seem to get the market going. The market that could have a bearish posture very easily is the Russell. First thing, the market has rallied into the combination of the 18-day average of closes and the 45. Second thing, lower highs, lower lows under the 18-day average. Should it drop under today's low, I think traders would probably want to have stops over today's high, and they could be saying, that's the sign that the market wants to go back into that 1337, the lower Bollinger Band. Should the market take out 1382.70, you still have the pattern of a lower low and then a higher high. You can't end up with a trend that way. So the only possibility of a trend trade is to the downside on this setup. In the VIX, you again settled up and over the upper Bollinger Band. You see that? So it's another attempt to push this number out. We've had several. This is the first time in a while it has closed over that upper Bollinger Band. That gives fuel to the downside in the stock markets. The two typically trade opposite each other. In the bond market, you have lost the ability to hold an embedded reading. Embedded means that the K and D lines, the red and the blue that make up the slow stochastic momentum oscillator, have turned down. And when they turn down, it often leads to price making a run for the 18-day average of closes. If that were to give ground, you might even go to the 100-day moving average in the green. Is the trend up? It is. You'd have to take out 150.27 to negate that trend. When we come to the 10-year notes, you can see that the market's got the higher high. And with today's break at 124.20, we took that out. So now we have no trend at all. We have the higher high and a lower low, support at 124.10. And in the June dollar index, we ran right into, starting on Friday, the upper Bollinger Band and the 100-day average. Did it again today, gave some ground up. Momentum very overbought, certainly in an uptrend in the market until you take out 128.5, about 67, 68 points lower. In the June euro currency, you have a running downtrend against the dollar. You've got lower highs, lower lows. The market is stuck on its lower Bollinger Band, and you now have 2 days in a row, yesterday, let me take that back, yesterday and today, where both numbers are under 20. They were not that way on Thursday. If they were to close like that, we'd say we have a locked-in bearish trend again. Market might be headed even lower. In the British pound, the market is in an oversold condition in a downtrend. Lower highs, lower lows, resistance pretty clear at 124.66 to 82, support 123.69. The bears have control, but the market is oversold. In the Japanese yen, you broke enough today to take this low under the previous one. So now you got a higher high, a lower low. You have no trend. The momentum had been embedded back here. You lost it, and prices finally worked their way to the 18-day average, that neutral zone, and it's stuck right here. Crude oil is a very bullish picture right here. It's riding the upper Bollinger Band. You have an embedded reading until this all comes apart. I don't know how high, but there's no reason to be short. You'd have to be worried because it is the first challenge in a while back over that 100-day average of closes, and it's into a resistance area just slightly up here that it's failed from before, but we'll see what the market can do. Rebob gasoline, the embedded reading. In other words, you converted from a market that had upside momentum to getting overbought to now converting itself magically and saying, hey, I'm very bullish. I'm no longer overbought. When the red line closes under 80, well, then the king lost his close, and it's now a period of time where, gee, I'm suddenly overbought. Let me get covered, all that, and the market often drifts back towards that 18-day average. You're not at that point. You're still in the bull point. In the nat gas, the break today was deep enough to take out a previous break low of 331.5. Momentum overbought, so you got lower highs, lower lows. The swing line is down. Prices are over the 18-day average, and I'm going to look for that 18-day average to jump over the 100 tonight. We'll see how the market reacts to all that. You know, one of the things that we have that's unique to us, you can't get this anywhere else, is our study called Chart of the Day that uses price counts. And price counts are very important because they give you an idea where markets might be headed. Example, we put one out today in rapeseed. The other day we do it the cocoa market. We do the energies. We do the currencies. We do them on all of them. But you can do them as well. We send these out as we see fit during the day, typically one, sometimes two a day. And we rotate them to give our clientele the, if you will, the type of different market presentations that they see. There's not always a count that's, if you will, just set itself up. But when there is, we want to get them to you. Because you'll get this sideways action. All of a sudden the market takes off and you get first counts, second counts. Or you'll get downside counts from the sideways action. All of a sudden they come in. And we know we've had a lot of sideways action. What about the stock indices? They're there right now. So you take a look at all that. You get an idea of where these counts might go. And it gives you another idea that if a market gets down often to what we call that third count, it's an area where the market often stalls out. When you set this up, getting to the first price count, high probability. But we discuss all that in our PDF. So give us a call. You can go to our website, sign up for Chart of the Day, the price count information. You can do it right here as well. If you're watching me on YouTube, click that. We're going to put you on the list. We're going to send you out PDFs. And if you'd like to use the charting software, if you haven't tried it before, free. We're going to make it all available to you so you can take a look at it. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.